No sound. That's going to be better here. Hold on. I have something to tell you. There we go. I think the audio's better now because we were on. Yeah. Now we have sound. Okay. I was just in the process of saying, yeah, no, sound isn't back. It was never on. You know why? Because I was out at my in laws, swimming in the pool, playing this game called Hitsters, I think, that my nieces had. And I'm like, hey, we gotta go. So I literally rolled in the door 10 minutes ago, showered, and I'm down here with you. I didn't even have time to style my hair. So we have the hat on for a little while. And yeah, I just realized that I didn't turn the sound on for my microphone. So no worry. It was all just a bunch of gobbledygook anyway. So I'm so thankful for all of you. And I was saying happy Father's Day to all of you, whether by blood or by bond. And I think I said, if you're a feline father, if you're a canine father, I don't know the other genus names for, hamsters, rodents, squirrels if you got them. We call them tree rats around here, at least I do. So I just see something with Pat here. By the way, what did you guys buy? I'm going to show you guys what I bought. Why don't we kick it off with that? Let's just kick it off with what I bought. I share it in my newsletter, right? We're going to slow it down a minute so we're not stumbling over our words. We don't got the marbles in the mouth. We're going to enunciate. We're going to say words fully like they were intended to, like subsidiary. Shout out to that one viewer out there who called me out because I used to say subsidiary. I guess that was just the way my brain thought it would be said, but yeah. So again, happy to have you here. And I'm going to show you, all you people drink, you people out there, I'm going to show you what. Yeah. Oh, so here's the funny thing. I tried to light the candle, but I don't know why I'm going to show you. You can't tell, but it's done burned all the way down. So we didn't have time to go fish out another candle here. So, oh, Fast Eddie with his Amber Lance. Have you ever guys seen that Amber Lance video with Black Betty? Look it up on YouTube. Good stuff. Mindless, won't teach you anything, but you should get a chuckle. Almost as funny as the Cody dog. I love Cody. Maybe we'll play it sometime. So, yeah, thanks for all of you being patient and waiting. And with that being said, why don't we kick it off real quick with what I bought. And I'm going to show you, it was in my latest newsletter that went out to all y'all today called Unfollow the Crowd. And I listened to Lee Lu's 2006 lecture at Columbia Business School. Really good. That's kind of what this was about. Thoughts on that, but we'll, just for brevity's sake, get down to my dividends. Lionel Bazel, Jim Betts, man, you got Lionel Bazel too. If any of you watching, this is one that I'm about ready to exit on. We can talk about that if you want to, but $20 from Lionel, $41.80 from ExxonMobil, $41.60 from Prudential, ticker PRU, $24.45. I need to change this. I want to make this bigger for all of you. Optimize your viewing experience. Here we go. $24.45 from Chevron, $36 from Main Street Capital. They have their special dividend that's going to be coming too, by the way. $52 from Realty Income and $17 from Agree Realty. And then, as you know, I've been switching things up in the portfolio. So currently have about $4,100 of dividend income remaining. And remember, this is not like our whole net worth or anything. These are portfolios we were building, sharing on the channel, learning the ropes, but sold a few more AT&T, slowly sloughing off those shares of T. And then what we bought was 4 more Nexstar Media. The damn thing kept dropping, averaged 150, 110. And that's one you guys know. If you watched me, by the way, shout out to Mr. Ryan Williams, who I was on with on Friday, the Dividend Happy Hour. So 3 shares of Visa, $269, 1 share of Agree Realty at $60, 1 share of Vici at basically $28, Another share of J&J, man. I think it's overblown, but the market's nervous, and 2 shares of SCHD. So that's what I bought. And now we're going to see what what you people bought. Yeah, sound. I love it. Yeah, I hate stuff like this. I'm a bit of a stickler and a perfectionist, so yeah. And hey, thanks for the happy Father's Day wishes. Also, I worked today. Had a 6-hour job this morning. You know, I think Father's Day is a hallmark holiday. So, Shamir, as always, thank you, dude. I still didn't get a chance. Well, I put it this way. I don't want to say that. You know what I mean? When I said I didn't get a chance to, that's an excuse, because if you really want to do something, you'll either find a way or you'll find an excuse. How do I know this? Because if one of your kids comes, if you're working on editing a video and one of your kids says, "Hey Dad, can you, hit the volleyball with me?" It's like, "Yeah, I'm really busy right now. I'd love to, just in a little bit." But if your kid came up to you while you're editing that video and said, "Yeah, Dad, I just fell down the stairs and my head don't feel so good," and they had a giant gash and they're just gushing blood, what are you going to say? Give me a half hour or so. No, no, no. You're going to drop everything. So it's kind of that way, Shamir, and that's just my long-winded way of saying I've prioritized other things, so I will definitely check that out. Mike, what's up, man? Good to see you, Sir Dude Bro. Man, what's up, man? What's going on? Thank you for swinging on by, all of you. Has Ryan done the same thing? That is too funny. That is, that honestly, that makes me feel better to know that I'm not alone and I'm not the only one that, hey, in my self-defense, to get this information of what I bought and share this time with you guys, I was literally spending time with this candle that wouldn't light. So, oh, look at this. We've got Sir Dude Bro Man with the nice little avatar. Looks like kind of reminds me of an NFT thing. Remember when those were a thing? Oh boy. Sorry. Yes, Whiskey Tango Foxtrot. I know you might want to get me with that one, but we're going to venture into the realm of not giving an F like Whiskey Tango Foxtrot. And we say the country as Niger. I believe it is Niger. So nice try. I do appreciate that, but we keep it above the belt here, mostly on this this strange brand of whatever the heck this is that I do that you all seem to enjoy because you're watching it and hanging out. But look at this guy, 10 shares of Nvidia, Mr. Money Bag, Sir Do Bro Man. Bought 10 shares of Nvidia as a Broadcom. So I assume you mean like a sympathy play on that? Can't wait until the stock split on the 15th. Yeah, that'll be interesting. I don't have the Walmart pizza pie up there, but that was something I created, and I think I've deleted it, where it showed a stock split of a pizza before and after, and I believe I got that idea from Morgan Housel. He did something similar when he did Tesla, but it shows the pizza. If just use your brains and your imaginations, I have full faith that you can do this. Imagine a pizza cut into 4 pieces, a round pizza. After the stock split, and I don't have the math to do the equivalent of a 10-for-1, but we'll say it was a 2-for-1. So for every 1 share that you had, you're now getting 2. And if the share was $100, you're now going to have 2 at 50. So in a 2-for-1 stock split, make this easy on my Cook County education. Say you have a pizza. Scrap that, reverse it, belay my last of what I said before. We're going with a pizza cut in half. Well, if it's a 2-for-1 stock split, you're now going to have 4 pieces, right? I think that's right. You know what I'm trying to say. The market cap of the business doesn't change. This is why we use visuals, because people like me can get confused so easily. There you are, Jim. Thanks for sharing your purchases with me. So still buying VZ. And Jim, you're further along in your dividend investing journey and where you're at, so you want that income, right? So he is buying VZ, Merck, Mondelez, and Enterprise Products Partners. Very nice. Oh, gordito, ¿qué pasó, mijo? He bought, which to buy is comprar. He bought some SCHD FAPI and SPYI. Wasn't there a rapper named Feppy Wap or Fetty Wap or something? That's what I think of when I see Feppy. I didn't look into it too much. I did get some emails from the fund manager that owns and runs Feppy, and they wanted me to talk about it. And they're like, "Hey, it's the hottest, latest, and greatest." And I don't know. I haven't looked on it yet. Oh, Darth, I'll drink to that, man. Drunk on dividends. Well, I guess that could be good. It could be bad. You could be right. You could be wrong. I don't remember the rest of the words of that. That's Public Image Limited. Little trivia there. Johnny Rotten used to sing for the Sex Pistols. Went and started another band called PIL, Public Image Limited, and that was one of their big songs. Never was a big fan of it. But how did we get to Darth's comment to there? Ladies and gentlemen, I don't know. Most of you will never know. So, Janice, thank you for stopping by, Janice. Jep Q, so covered call ETF. VOO, which is the Vanguard version of the S&P 500. And good old SCHD. So what's Shamir got? And then if you guys have any questions for me, hit it. Throw it in there, I'll try and make sure I at least address it in a somewhat comprehensive and understandable way, maybe, Shamir tends not to follow the crowd on many things. That's what Li Lu was talking about. And just to kind of go on the idea of that, our human DNA we're engineered toward wanting to stick with the crowd because it means survival, safety in numbers. If the crowd is onto a place where there's food, you follow the crowd. But in investing, following the crowd because the crowd doesn't have all the right information, wisdom of the crowd thing, they could be on the right track to something. But if you dig deeper than the crowd, you could potentially find a vein of gold and make a lot of money. But the crowd will laugh at you, tell you you're wrong, and it's going to feel cold and lonely without the crowd around there. So it can be a tough place. I'm kind of feeling that with my Nexstar Media position. The business, as far as I'm concerned, is okay. And I think some of their growth vectors, now we don't know what's going to happen, but I think that they're going to be okay with, we won't get into it. Put it that way. I'm kind of feeling like the crowd is saying, you're wrong, dude. This is a bad investment. So, Karma, well, I got to say this. Karma, that's a tough one for me, man. That's a tough one, but we'll call you K. Like Men in Black, You got J, you got K, who picked up 56 shares of, I'm thinking you might have meant DIVO, because if it is IDVO, I don't know that, but I do know DIVO. So let me know that. And then Steve K bought his first share of XDTE. I don't know that, but just from the ticker symbol, it looks like, is that a weekly? I'm guessing it's a weekly options play because the DTE is days to expiration. So X might mean, I don't know what the X is, but let us know, man. Patty S bought kind of with me, buying J&J and TD. Haven't added any TD to that. I love the new names. We got Dirty Investor. I don't know if my... I need a haircut. This is awful. I literally jumped out of the shower and threw my hat on because, hey, I just felt gross in the sun all day, suntan lotion, and, got to get that stuff off, man. I want to be somewhat presentable, clean, got to smell good for you guys. I mean, I don't have the Wonka smell-o-vision yet where you can, smell the wonderful, I don't know, whatever, but it's creepy, isn't it? It's creepy. Like, imagine somebody just wanders in and they're like, what the hell? This guy's talking about smell-o-vision and we can smell his body wash. So, what did that dad joke go? I used to have a soap addiction, but now I'm clean. Something like that. Everybody, throw in your favorite dad jokes. Let's hear them, If you got a good dad joke, please drop it in the the chat or the comments. That's a very glimpse, ladies and gentlemen, at a look inside my brain when one side of my brain wants to say comments and the other side wants to say chat, and they both fire it down to my mouth at the same time, and confusion, hilarity, and hijinks ensue. Fun. I'm just so happy that you're here. I really do enjoy that you guys are here. All right, back on track. You also, Mr. Moneybags here buying more Microsoft, Realty Income, and Mainstream Capital, and forgets what else. Well, you got to let us know, buddy. I'll be disappointed. I won't be disappointed in you. I love you. Oh, Darth, all in and all hands on deck for you with Broadcom tomorrow. Is that when the split takes hold? Or is it just you're going in pre-split? No, I don't think it's the split then. Never had it called an NFT. It just reminded me of that. But what's up, Travis? Hey, did you ever get to hook up with Jonah? I think you got the barber shop out there in North Dakota. I don't remember where, but it's North Dakota, right? Purchased Pfizer and Best Buy. Very interesting that you bought Best Buy. Sorry, this freaking me out here with the visor. I'm not used to talking to you guys and having a visor on. Oh, July, there we go. July 5th, that. Now explain fiat currency with trillions printed out of nothing. I'm assuming that might have been as a conversation about something else. And if not, I don't know. Are you a Bitcoiner too? So let me know what you, a little bit more with that. But yeah, that's why governments, they'll try and inflate away the debt, right? They'll just keep printing money and printing money. So unfortunately, inflation is nasty, and this is why we kind of want businesses that are capital light, because if you have a capital intensive business, it really puts you behind the eight ball in terms of growth as compared to businesses that are really capital light. I know Warren Buffett used that example with See's Candy to show how they are a less capital intensive business than like a utility. And it just, it affects everything. Inflation is nasty, and hey, at least the Fed, they tried to get it down to their 2%. It's always going to be with us. It's always going to be with us, right? Maybe we put inflation, flat. I was going to say fat tires. That's a beer. Inflation, flat tires, and death. And I want to say taxes. We always say taxes. That's if you live in a civilized society, right? Because you could be like a mountain man, or you could find your way into some castaway island, right? And then you wouldn't have to, there would be no inflation, taxes, or flat tires if you're not driving. Unfortunately, though, ladies and gentlemen, I don't think we're going to be able to do much about death. Will we ever figure it out? I don't know. I don't know if we want to, right? We're going to go all philosophical, like, oh, here he goes again, giving us that mortal reminder. Thank you. Jim, I'm sorry. I'm talking, thinking, reading comments. Jim bets, are the Mondelez dividends enough to buy some Oreos? That's a fun thought. In the past I did a video how many shares of, I think it was ExxonMobil, you would need to fill up or to pay for a tank of gas a month or something like that. You bought the NVIDIA shares post-split. You wish you were able to buy them pre. And you mean that the Broadcom play is to sell out of NVIDIA when it goes back up. Whoa, yeah, to split prices, pre-split. Boy, the tongue is getting tight tonight. Give yourself a tongue twister to explain tongue twisters. Yes, I did hear that. I said tongue twister. Okay. Give me a break here. I've had a few, not a few. Here we go. I don't have a drinking problem. I had 2 beers while I was by my in-laws' house. So give me a break, huh? Darth, as I always say, Darth, man, don't let us know what you've been buying. Let us know what you don't own and you haven't been buying. That'll put us in a better, that'll help us triangulate better as to what you are currently invested in, right? I tease because I love, and I kid because I care. That's the new tagline of the Dapper Dividends show. I tease because I love, and I kid because I care. All right, Michael Anthony, if you are the bass player from the ex-bass player from Van Halen, hey man, shout out. Thank you for watching the show. If not, we still love you and you're welcome. GTN, I don't know GTN, paid off over 53 million, then refinanced the rest, which 19 insiders bought. That's an interesting one. GTN, I have not looked up GTN before, and I'm kind of close to being caught up. Let's take a peek on that. You piked my interest on GTN. So let's, I guess we'll do dividend news here since it was set up. Hey everybody, it's the time of the show for dividend news. It's news you can use provided by simplysafedividends.com. And then we'll do GTN. FedEx raised their dividend. This is just from the past week. Raised their dividend 10%, 9.5%. That's close enough. 10%, 22 years of uninterrupted dividends. If you want to read these a little more, then pause the video. BlackRock's BCAT fund adopts aggressive variable distribution policy. The net asset value likely to be pressured. Hey, I might be seeing in a week and a half one of my friends, maybe Jeremy from Dividend Stockpile, but this is a closed-end fund, I believe, 21% dividend yield. Yeah, I don't know. That just looks like a big red flag to me, and they give it a 20, very unsafe. But you know, the theory there goes. Even if they have the dividend, cut it in half, you're still getting a 10% yield, right? So we'll see. I don't know about that. They refreshed their look on the commercial printer Ennis, ticker EBF. Oh, nice. From Texas in 1909 they were founded. Target, there you go. Minute. You almost need you don't quite need a microscope to see that dividend raise, but 1.8% is their 53rd year of dividend growth. Safety score of 80 is Target Dividend King. My daughter owns Caterpillar. She's up 100%. The best performer, oddly enough, in her small, yet formidable for her 15-year-old self, custodial account. But Caterpillar raised their dividend 8.5%. And that's their 31st straight year of dividend raises. And I think second to last, National Fuel Gas, ticker NFG, raised their dividend 4%. They are a dividend king too. So that's NFG. And they have, check that out, over 100 years of uninterrupted dividends. So shout out to them. And then they refreshed their outlook on Johnson & Johnson, dividend safety score of 99. And then I guess they didn't put this in a news thing, but yeah, Innovative Industrial Properties raised their dividend 4.4%. And I have 10 shares, so dividend increased annually $3.20. And now, my friend from Van Halen, Michael Anthony, because I can't type. I'm like Eddie Van Halen. I can't type and talk. He couldn't sing and play guitar. Our friends, I didn't recognize it. Great Television, competitor to Nexstar Media Group. Very, very interesting. So, yeah, GTN, this is one of the competitors to Nexstar. So, yeah, it looks like they have a frozen dividend. And what was their share price? $4.92. So, technically, they are a penny stock. Anything below $5 per share is penny stock territory. So there you go, 32 cents per share. They do pay it every quarter as 8 cents. Because 8 divided by 4, I can do that math, it's 32. Yeah, that's interesting, their free cash flow. So they must have went public recently, or I don't know why there's not any data previous to, unless that's when they started paying the dividend. That's what happened. Belay my last. So yeah, very cyclical, a lot more cyclical than Nexstar with the free cash and earnings per share up and down and then negative. That's one thing Nexstar doesn't have. They've not had any negative. They're just so much stronger, I believe. And yeah, they're still buying back shares. Yeah, it just looks okay. But I'm just more comfortable with Nexstar, and I've done more. Yeah, they have a higher return on invested capital, does Nexstar, and That's interesting. I don't know if what Gray is doing for their growth, if they're doing anything similar to their debt is similar to Nexstar though. It's up there. Interest coverage ratio, yeah, about the same. I wish their debt would be better, but there you go. But I think Nexstar's EBITDA to debt is like two. They're almost to two, down into the twos. It's a little over three. So interesting, man. So yeah, Janice, look into FEPI. I haven't really looked into it. So hey, what's up, John? I don't think I responded to one of your comments. I'll get on it. I'll be doing that soon. But look at this, Darth. You don't own SCHD. Take a sip of the tea for that one, man. It's okay. We'll allow it. We still love you. It's your journey, you know. And I was talking with somebody in the comments. They thought recently it's been losing a lot of money. But honestly, if you go back to 10 years, if you do a 10-year back test, I believe it was that I think SCHD has a 173% total return. Could be 143%. It's one of those two. And the S&P 500 is 1 basis point below it. It's like 172%. So they're neck and neck on a total return basis. But obviously, the S&P 500 has just been immensely helped out by the tech boom and the Mag 7. Yeah, man, I'm probably gonna buy another share too. I'm up to, well, let's see what I'm up to. Let me swing you all back. No, yeah, all right, we'll do it quick. I'm always wanting to get to the comments. I try to give everyone too much time for your comments. I want to talk to everybody. So let's see here. Sorry, it's too blown up. We can't read it. You zoomed in too far. That's 2% of portfolio. I guess I could have done this different. This is on Simply Safe Dividends. So yeah, J&J is my top now at 11.4%. Nexstar's been dropping. Look at it. The top two I've been adding as they've been dropping. So my thesis, the fundamentals I think are still intact. My thesis is still intact. But Visa, we just started buying, and I'm just going to buzz through some of these quick because I want to talk to you guys. There you go. Visa up to 15 shares. It's 2.6%, but it is in the Roth. So if I break this down into the Roth, which only has a few holdings, it is now, here we go. SCHD is 45% of my Roth. Visa in the second place, just like that. But because it's $270 a share, it's 14.8%. And I'm up 0.4%. So we're just about break even on that. And yeah, I love it. Their dividend yield is 10% above the 5-year average. So if you subscribe to dividend yield theory, then that is something you would like. And SCHG, there we go. That's a little bit of growth play I'm up on. So there you go. That's what I am doing with my Visa. So I might join you in buying that too. Oh, what is the White Claw stuff? Darth, I forget, man. There was some hubbub or some static or something going on about was that right? Was Fediwap or Fepiwap? No, it's not Fepiwap. Fediwap? I don't even know how I know that. I'm sure from osmosis of somebody somewhere, it's, you know. Let us know. INBM210, happy Father's Day to you too. And, oh, there he is, my guy. You know what, man? I'm thinking a week from tonight, I will be in Orlando at the Harry Potter house. And it's an Airbnb that I hope I didn't give too much away. Well, you want to try and find it. I don't know. Good luck. I'm going to be with a whole bunch of people. And, you know, I think a couple nights we're having volleyball parents over. But yeah, my daughter and my sister-in-law are big into Harry Potter. Harry Potter heads, maybe. Harry heads. and yeah, we found this Airbnb we stayed at last year, and it's just completely professionally decked out like a Harry Potter thing. It's impressive. So we commercial. So I got my phone going there. But what was I saying? Oh, Craig, you maybe I'll have you join me because I'm gonna experiment and try to use my I'm gonna try and use the laptop. I have a MacBook, a brand new MacBook, so I'm gonna try and use that camera to do a live stream and use the microphone in it. And if it's awful, we'll probably cut it short. But I might have you join me on that just to take away some of the, so I'm not just constantly talking. So if you're available, my man, why don't you pop on with me next Sunday night while I'm in Orlando? Of course, I say that. Let me make sure that it's going to work out because I don't know our schedule and things, so I don't want to commit to something. But I'll let all of you know definitely, probably the day before I'll set it up or that morning if you're available. So to get back to your comment, my friend, my man, you bought. Oh, by the way, you can see Craig. He did an on Ari Gutman. He was on with him, Masters of the Market series. So nice to see that, buddy. Bought a bunch of Vici on Friday. I bought that one share. Also building DGRO and FDVV positions. Have a look at the Fidelity High Dividend ETF. I've looked at it in the past and I don't remember too much about it, so maybe not right now because I'm going to get caught up. So, good one. We will remember FDVV. I'll remember it. I didn't write it down. I'll take a screenshot here. So, Michael Anthony says all food companies making new lows each day, like ConAgra, Kellogg's, General Mills, KHC, no end to selling in food stocks. And to that point, actually, I looked to make sure, and I think a lot of the media industry is in upheaval, especially with the whole Paramount, Warner Brothers Discovery, joint ventures, streaming, aside from Netflix and Fox. I looked at a bunch on Friday, and Nexstar, Comcast, Paramount, Warner Brothers Discovery, Gray. I think I looked at one more. That's all. Disney. Disney's down. So a lot of the media businesses are down in the past month or so. And I just think it's a lot of market uncertainty. And remember, the market hates uncertainty. So if the market is uncertain about a sector, a lot of times people say, I don't want to deal with it and try and pick the winner. So they get out of it. And that could be the same right now for food companies. I didn't realize that they were all down, so we really do thank you for sharing that. My man, what was it like working with Alex and Eddie? I gotta know. Dude, Michael Anthony could be an 18-year-old kid who has no idea who Van Halen is. Only days I'll drink one is if I get 100K subscribers or if Ohio State wins the national title in football. Well, there you go, people. We should make that happen. If all of you were betting, I wonder which one is closer to happening. I don't know. I say that jokingly because look at me. Yeah, in a good week, I might get like 50 subscribers or something. And it's just like, this is a hobby for me, people. I'm learning. I'm sharing what I'm learning. And I just enjoy it. I really do enjoy it. And I don't know if I would ever be a full-time YouTuber, but we'll see. We will see. Yes, I think you were right. Communications are indeed out of favor. I am too far behind all you guys, so I do apologize if I'm going to start scrolling here to get... There she is! There she is, Lisa J. I had a bit of fun watching her live stream while I was driving home, and she was with Prez, the investor. I forgot his name already, but Prez, P-R-E-Z, and yeah, she said, she kind of confused me with Ryan. And I said, oh, it's okay, Lisa. Don't worry about it. We all look alike, so I forgive you, And everyone's thinking, like, can you say that? Yes, we can say it. All love here. It's all fun. IDVO is the international brother sister of DIVO. Okay. So you're not dyslexic. I love it. I'm not dyslexic. Good. All right. Yeah, dividend investing, Janice, is completely out of favor right now. And Ryan and I were talking, little inside baseball here, about a book called I think it's Ownership Dividend by Oh, he was just on the Dividend Mailbox podcast with Greg Denweiler. So if you subscribe to that, do it. I can't think of his name right now, but I think it's called the Ownership Dividend. So, all right, I'm getting close to being caught up to you guys. There we go. Michael Anthony again is Vici is going to drop to 27. I'll buy more. Honestly, I will buy more. Doesn't matter that. The Pfizer payout ratio, reveal it to us. All right, let's see. I don't know what it's at. I haven't looked at Pfizer in a minute, but because, oh, I just realized right now that I have Rusty Nails still up from the live stream I was on with Ryan. And I can share that story in a minute, but oh my gosh, well, there you go. I was having a little bit of fun, but what are we looking up, Darth? Pfizer. So yeah, that big yield. So that's an accidentally high yield of 6%, meaning that the share prices keep coming down and it's pushing the dividend yield higher. Remember, it's like the, I don't know, water levels. I was going to say the bubble on a level, but that's not right. So yeah, as the share price goes down, the yield goes up, and as the share price goes up, the yield goes down, which is why Broadcom got kicked out of SCHD. The share price kept going up and up and up, and then the dividend yield fell below the threshold that's required to keep it inside of SCHD. So, you know, it got the boot. It got the boot. But anyway, back to Pfizer here. They keep maintaining their safety score, but you want to see the payout ratio. That's interesting. They cut. I didn't realize they cut the dividend back then in 08. So during the last global, the GFC. Yeah, their yield is 53% above the 5-year average. So it could be good, could be bad. And there you go. The 52-week price range, that kind of clues you into why it's so high, because the 52-week price range is down to $27, almost to the 52-week low of 25. It had been as high as 40. So there you go. This is what Darth was talking about. Let's blow that up a little bit right there. This is no bueno. That is wild. And you would think that they had such an influx of revenue from the vaccines and everything, right, Darth, from COVID? So I don't know why their free cash flow just, you can see it down here. I made it too big. Let me get all 4 of these up on the screen. But so their free cash, here it goes. Look at in 2020, it was, you know, traditionally in around the mid 2s. COVID happened. They had a fat amount of cash just fly into the business. So free cash per share went up to $5.33. I know if this is too small, I apologize. And then it's just fallen off a cliff. So that's not good. That is not good to see. But it is looking to come down. They project over the next 12 months. Remember, nobody's psychic, so this next 12 months is just a guess. And I enjoy free cash flow per share a lot more, because earnings don't necessarily always translate into cash, right? You're not going to really pay your employees out of the earnings and buy back shares, pay down debt, you know, pay the dividend, do the things like that. So in my opinion, free cash flow and free cash flow per share is much, much more important than earnings per share, because it can also be manipulated by share buybacks and equity, you know, just all this stuff that financial games can be played. So where's Kevin Burgess when you need him to explain it a little better and quicker than I just did? Sales growth, negative 42%. So this is Pfizer we're looking at, everybody, if you just popped on. Still buying back shares, but yuck. Yeah, return on invested capital. You really want to see that about 15% or greater, because then at least they're out earning the cost of capital. So you really want to see that a little bit higher. I wouldn't invest in them, and if you do, yeah, free cash flow margin falling off. I think they're going to cut the dividend. I would guess that this is a big candidate for a dividend cut if they can't get some things under control. Yeah, and that interest. So right here, the interest coverage ratio, There we go. Make that a little bigger. I think you guys can read that. That's too big. I know. I want the comments. I got to get caught up. But once this drops below 1, it means that the business does not have enough operating income to cover the interest on the debt. So currently right now, this 1.16 means that Pfizer has $1.16 of operating income to cover every $1 of interest expense on their debt. And if you can't cover the interest on the debt, not let alone the principal, but the interest, yeah, that's a really, really tough place to be in. So not for me. I'm not too keen on Pfizer. So there you go, man. That's a bucket of yuck if I ever saw it. Dex Invictus, what's up, man? With the frog coffee. I don't get the emoji game there, but speaking of games, try Hitsters if you're. Let me explain that. Oh my God, Darth. You really have 148 shares of NVIDIA? My God, man. You going to sell any options on that? Oh, this is post-split. Okay. I was going to say, dude, you're there. You made it, man. I think, Frank, you're going to talk about me reminding us of being mortal, that memento mori, popularized by Ryan Holiday. It means something to the effect of you must die, or remember you must die. So the clock's ticking. The sands of the hourglass are dropping away, and you don't know how long you got. You could fall off a boat in Lake Michigan, like we actually were on the news for a split second. We went to the lake yesterday, and for my wife's birthday, Father's Day thing, we wanted to just bike the lake and get pizza at Gino's East. So in the playpen, Saturday early evening, 4 o'clock, some 58-year-old dude fell off one of the boats, and he didn't come back up. So they had dive teams, helicopters, and all that. And we were in one of the panning shots. We were on NBC's footage. So Travis, you didn't hook up with Jonah Weingarten, who we had on. He plays in Pyramaze and a couple other bands, all European-based. So it's not, don't worry, man. You're here in spirit. Yeah, he has if you're in Bismarck, Travis has a haircut shop. So there you go, man. Maybe we drum up a little bit of business for you. I don't know how many people listen from Bismarck, but currently trying to buy CRF to start a dividend income. I don't know CRF. Anybody know that? After the split, yeah, Darth, that's solid, man. And one of the other reasons they do that now, if you wanted to, you could sell options on those 100 shares, not the 48, but on the 100. So, oh, you sent a question Friday. I'm trying to remember, man. Was it about CRF? I'm probably sure I looked it up. I'm not going to throw this on, but let me see. CRF. What is CRF? CRF. I think you were right. Is this? Yeah, it's a closed-end fund, and I told you I don't understand it. It looks very unsafe to me. They got a safety score of 20, very unsafe. So I do remember that now. Yeah, I do remember that. John, I'm trying to get caught up, man. Maybe we can come back to this. I don't know SPMO or SPO. I've never even seen those tickers. So I can't I can't comment on it. What are you guys planning on buying this week? What's at the tippy top of your list? I shared the top secret, my list, and I'm tempted. I'm very tempted to just completely sell out of AT&T and go into either Nike or Rollins. I really am. And I think I still have a couple hundred shares of AT&T split between the self-directed IRA and my taxable. And I laugh because my brain's like, you know what's going to happen as soon as you sell. As soon as you sell AT&T, it is going to go up 20% for some God unknown reason as soon as I sell. But yeah, what do they say? Every day you choose not to buy a stock is another... No, I'm the worst with that, right? Every day you choose not to sell a stock is a day you decide to buy it. Something like that is how it should go. GTN book value. Yeah, book value is not as important as it used to be back in the day. So, because honestly, that has to tell you something then, right? Because what do all the professional investors know? If it's almost $21 of book value per share and it's $5, I mean that is widely known information, and they say that the market discounts widely known information. So with this widely known information discounted, why are people still not buying? That's my question. And granted, I've never dug into gray, so I don't know, but I do know that book value doesn't have the same swagger. It doesn't have the same panache that it used to back in the day. Yeah, especially if you look at a lot of the asset light businesses, it's one of those things. It's just a metric. It's not a be all end all, but it's part of a process. You tax and move all the money into the Roth. Well, if you can figure that out, man, then I know we try and do our backdoor Roths, and hey, you're gonna pay taxes some way. They're either gonna get you on the front end or the back end, man. It's just the way it goes. Everyone wants to avoid the tax, man, but I'm not that against taxes. I know, right? A lot of libertarians, because I was one too, taxation is theft. But honestly, man, I kind of like having, and we could debate all night about the how much money is going into the black holes of them, but I like having police and fire, and I don't want a private police force and that stuff. So there's a lot of good that come from taxes. A lot of good things are done with it to keep our society going. So there's that little soapbox there from somebody who's a political alien. Not the best. Yeah, not the best dividend growth stock. Dude, they just raised the dividend over 100%, right? Oh boy. Craig bought next star. I love it. I love sharing what their dividend growth has been outstanding, but that's not a reason. That's one of the things that attracted me to it. But we always say, for those of you that have, I need to stop saying, a lot. It's been one of my things in life, and I just heard it twice really quick. Instead of saying, when you feel like saying it, instead just pause and say, if you're somebody that's ever been to a gentleman's club, when you see people in a certain light and they're dark for a reason, things look attractive, but then you can get things in a different situation and they're not so attractive. That's kind of like a high dividend yield. You can be attracted to it, but you're going to need to do more digging and see what things look like that are really underneath I wanted to say some other words, the dividend in the business, right? When we buy a stock, we're ultimately buying the business that pays the dividend. So don't ever just buy the dividend. I'm sure somebody answered that was probably NXST, Nexstar. But yeah, I love their growth factors. And they say, my guys on Dividend Talk podcast talked about it on the podcast I heard today. Never fall in love with a CEO. It's hard, but you should never try and fall in love with a CEO. I just thought of the hard joke. What they say, the nudist beach and the whole, the blind guy at the nudist beach. How do you tell him it's not hard? So, yeah, and This, Frank, is what we talked about with Nicholas, that when you buy an ETF, you're buying the methodology. So I understood it when it happened. I wasn't happy, but I knew it was coming, because when you buy an ETF, you are buying the methodology that's used to put things into the ETF. So unless you're buying VTI, which is the sister of VTSAX, remember, usually if it's 5 letters and there's an X after the end of it, it is a mutual fund. If there are 2 X's, like, what's the one? It's a money market fund. I think SPAXX is one of them, maybe. So if it's 1 X, it's a mutual fund. 2 X's, I believe it's a money market fund. And then the mutual fund sister to VTSAX is VTI, which is the total investable U.S. stock market. So you're buying almost 4,000 stocks when you do that. Right? Right. Next. I can't, you guys get me going. I could probably do this until my voice goes out. I just love it. I love learning, talking, investing. I'm supposed to be going quick here, and you guys keep tripping me up. Russ, speculative. What's your take on the covered call ETFs? I think it's a little bit of a fad, but we'll see. I don't. I haven't been too big on them because I know from selling covered calls and cash secured puts that you really limit your upside. There's no other way to look at it, and I think that's why almost every single yield max ETF has underperformed its correlated asset, the asset that it follows. So, the synthetic covered calls and things like that. It's all just trying to maximize income, but there's a price to pay. There's no one big perfect thing. There's many ways to financial heaven, but Fast Eddie. I have a thought on that, man. Have you ever, Fast Eddie? I would highly recommend reading the book Die with Zero by Bill Perkins. And you don't have to follow the financial advice he gives or things he does, but the thought in there that really flipped things around for me was that your money is all experiences left on the table. And I've personally talked with a few people that their fathers were always working, always away, never came to their sporting events as a kid, didn't spend much time with them because they were working 6-7 days a week. And when they passed, they would leave, I think one of them, the father left each of the kids something like $1.5 million, $2 million. And I'll never forget that. The son said, I would give all of this money back to have had a father there when I was a child and had shared my childhood experience with my father, but he was always away working. So in the end, that money meant jack squat to him. He's like, okay, it's great, but man, if I could have only had that experience. So that's why we're going to England and Scotland next year. And I don't know if I can save the requisite amount for it, but guess what? I will sell stocks to fill in the gaps to make that happen. Why? Because I can always buy more stocks. And I know there's a compounding effect. And I need to get caught up. But yeah, anyway, so I will be going through these very quickly. So there he is. We just talked about Prez the Investor. What's up, man? Shout out, sub to your channel. Everybody watching, check him out. And I want to say one thing. You see, you guys get me every time. I think it is so freaking cool to see Prez and Lisa talk because honestly, I don't see enough black people talking investing, and we need you because there are a lot of people that aren't going to get it. I can't communicate to somebody that grew up in the inner city, like in the Inglewood neighborhood here in Chicago or in Garfield Park. They're going to see me and they're going to be like, this guy doesn't understand. He doesn't know. It's just a fact of life. So we need so many more people, especially black men and women, talking and educating people that there is a better way. And I loved what I heard from you on the live stream today. And it's just, you can get to them. You can get to people. So, dude, I saw your channel, 374 subs or whatever. Don't stop. Keep going. You'll get the word out. But honestly, maybe that's an angle you can take. That's just, I don't know your experience and whatever it is, like, and especially for Lisa, talk about an underrepresented minority, black women in investing. Way not enough black women in investing. So you guys, I think it's so cool. I love it. I love it. I love it. And here we go. Oh, Jim, I did pass over. It was his dad joke. I said, share your dad joke. So I gave my handyman a to-do list, but he only did jobs 1, 3, and 5. Turns out he only does odd jobs. It's beautiful. That is beautiful, beautiful, beautiful. ET, probably solid. I sold ET to consolidate into Enterprise Products Partners, EPD. I think they are a little bit better than Energy Transfer. And again, all of you guys, I'm so sorry that I want to give too much time to every comment. So, oh, buddy, Yeah, so I missed this too. I'm blabberjawing. You know what, man? You are new here because everybody knows I say, don't spend the money on me, dude. Just your view, whatever few, splinters of a cent I get from your viewership, man, keep that money, but donate it to charity, spend it on yourself, invest it on yourself and your family, learn something new, buy a book, whatever you have to do, man. You don't have to do that. Don't tip it to me, but ET, since you did that, I'll go a few minutes longer here, but I'm going to give you the safety score on Energy Transfer. They do give you a K1 because they are a master limited partnership. So do be aware of that if you hold them in a taxable account. So there it is. K1 will be issued. Yeah, 8.38%, borderline safety score of 50. So they're probably okay. I just liked EPD better. And yeah, there's their dividend growth chart. So they had been cutting prior to the pandemic. Yeah, it's just I think a lot of people are chasing that yield, and it's right in line with their 5-year average. But the forward price to distributable cash flow, which is the DCF, that's kind of like AFFO for REITs or earnings per share, like PE, for most of the other stocks. So it's not really at a bargain there. And I sold in the $14 range, but the last thing I'll show you, because I want to get a couple more comments here, but the DCF payout ratio, very low. It's good to go. And yeah, so ET should be okay. I just preferred EPD better. And again, man, I thank you for the $1.99. Could almost get a 40 with that. Are 40s still that cheap? Yeah, why do I still have AT&T? Stubbornness, hard-headedness, thinking that as soon as I sell, it's going to go up in share price. So that's why I still have it. Scrolling to get caught up. Man, this was a bad one. I went back in my way. Do you hear me reading? That's me reading and trying to formulate a thought to you guys. Yeah, T, I'm going to be underwater on that for a long time. I don't have enough T. I think I still have 200 shares, but honestly, like, I would way much more. What is that? Like, isn't that great? That's my Cook County education. When I started, I would way more have money, caveman speak apparently, in Nike or Rollins, hands down. It's not even. So that leads me to say, like, why do I still have it? Like, stubbornness. That's why. Janice reading Die with Zero right now. Good book. I liked it. If you Google, I came across it once, but there's people that kind of ran the numbers on his math, and some things of his financial math don't really check out, but it's irrelevant because the point I took away was, man, that money, if you die with more than zero, okay, we're going to do it, but I would say don't sacrifice time with loved ones or friends, if you're single, whatever, because that money can buy you experiences with people. And it's just a very interesting thing. So I'm glad you agree with me, Prez. So man, everybody, shout him out, shout him out, or subscribe to him. I guess I'm shouting him out. So, hey, you can shout him out too. If you just want to just go, I don't know, to the corner gas station and start shouting out. I'm sure Prez isn't going to care. He's not going to mind if you want to give him that free pub. So, can you tell? I get excited. I get pumped for this. I love it. And this is not normal. If you guys are here, I normally don't have a hat on, but I just did not have time to, do my thing. It's a mess. We're gonna put that right back on because I'm gonna get a haircut too tomorrow for my Florida trip here. But wow, well, yeah, behind, I'm newer, like you said. Well, I appreciate that, man, and I've been getting about topping out around 70, 75 viewers, and I like it. And I told Ryan this. I'm like, dude, I spend too much time, and I always tease Kevin Burgess that I literally want to spend like 10 minutes on every single comment, and I'm still learning this. I'm going to learn how to get better, because then I get that where I spend 5 minutes on, whatever, 4 comments, and all of a sudden the chat, I just see it's like, oh man. But yeah, so dude, Tyler, I appreciate it, man. And I don't know. I know other people, this is their livelihood. They do YouTube. I don't. It's a hobby that pays me a few bucks, and it's a labor of love. And honestly, the biggest benefit for me is just talking with all of you, hearing what you have to say. So I'm skipping that commercial that was just playing. And yeah, so I'll leave it with this one. Craig, I'll hit you up on Twitter, or I don't think I have your number, do I? We've never texted. I should give you my phone number. So, yeah, anyway, I might have you on next Sunday if I can make it. And everybody, I'll be in Florida next week. I'll be in Orlando and then also in Tampa at the end of our trip. So I got a 4-day volleyball tournament that starts this coming Friday. Yeah, Friday. So I'm flying out Thursday night. And I'm working on a video, should have it hopefully done in that time. And it's going to be, I think, 5 beginner dividend mistakes to avoid. I think that's what I titled it. But either way, I'll still talk to you guys. I'll make a post or something. And Craig, I'd love for you to join me, because it's not going to be a nice setup like this. So hopefully I'll get some good lighting and whatnot. So yeah, everybody, Lisa J, Prez the Investor, check out their channels, and I'll do better to keep up with the comments. So we got another week in the markets. Remember, and I'll leave you with this thought to ponder from Lee and Lou, is that he said, for people that are value investors like us and seek to own businesses for a long period of time, the market is designed for traders, not for business owners. And that's what Ben Graham meant about that. The market is there to serve you and not instruct you. The market instructs traders, but it serves long-term investors, people that want to own businesses instead of renting stocks. And that's kind of what we're doing on the channel, and that's what we're sharing with all of you. So again, I thank you for swinging on by, spending some time with me. Pee-wee takes me out because I'm a kid of the 80s. I love it. And I love you for spending some time with me. So thanks for stopping by. I really do appreciate it. And I will see you again, hopefully, live from Orlando with Mr. SCHD Stan next week. Have a freaking great week in the markets. So long, everybody.